Let me tell you a cool fact. There is actually a very good way how you could see that somebody is clearly wasting his life without any practical use or purpose. And actually he's making himself imbecile year after year after year. And this wonderful discipline is making market forecasts. Because let me tell you, for 15 plus years when I'm in financial markets, I have never read, seen or heard anyone who has made successful market forecasts regardless of markets and regardless of way how you could actually measure this. In other words, if you are making tons of effort to figure out what will happen with stock market, bond market, forex, gold or whatever in the next 6 months, your chances are at best even with tossing of coin. In simple words, I will be tossing coin. On one side I would say markets will rise, on the other side I will say markets will fall. And this is the best bet everyone could make. This simple, this bluntly. And every other characteristic or way how you could actually forecast markets are plainly useless. And here's the thing, why I'm so cruel about this particular statement. Because there are two things we have to consider. Firstly, the way we could actually make forecasts. In order to make forecasts, we have to make assumptions. We have to make assumptions about future which are inherently, by its definition, unknown. Because look at it more broadly. Look at all your life. Have you ever had time period in your life, if you could chop your life in 6-month time periods, where you could actually objectively forecast what might happen? I don't think so. In best, what you could have is to have a rough guide where your life is going and be approximately sure about tedious things about lives. But things that really changed and shaped your life, things that made most of the difference, were inherently some sort of surprises, unexpected events in good or bad way or something like that. You might have car accident, you might have some financial crises or existential crises, you might have some job offering, or you might have some business opportunity or whatnot. But most of these things in most cases were unknown, illogical or unforeseen, but these are the things that made or break your life. And in kind of similar pattern is with markets. Yes, we know that at very long time frame, most of the markets are rather predictable. Currency markets move in some sort of trends, Commodity markets as well, they have long-term trends based on supply and demand, and we could actually see from today's perspective, and if you are looking at with hindsight, we could see that it's rather logical. Same with stock market and bonds. They have some sort of intrinsic patterns how they work. But if we narrow it down to shorter term, everything goes out of the window, because here we are literally in odds with uncertainty. There are many things that we simply don't know, cannot understand and cannot foresee. And if you pinpoint all the largest events in stock market history for the last 50 or 70 years, you would see that most of these moves were inherently unpredictable. But these unpredictable moves made most of the impact. And that's why I'm saying that if you try to assess unknown unknowns, you are a fool who is simply wasting your life. And from other side, that's actually not particularly useful thing to do. Because why? What's the benefit for you to forecast markets? Natural presumption, of course, is to understand what will happen with markets so you could adjust your investment portfolio, make bold investments or bold trades in a specific direction. For instance, if you believe that there will be some inherent instabilities in energy markets, you might bet on natural gas, oil, heating oil or whatnot. Or if you are believing that, AI market is strongly overpriced and this is a huge bubble, you could actually go and short it. But is this how it works? Actually, no. I haven't seen trader or investor or hedge fund manager in my life which actually relies on market forecasts. Look at value investing school, look at growth investing school, look at trend followers, look at statistical arbitrage, or any of the few approaches to financial markets which actually work. And none of these people who are successful in it will say that they are making money out of market forecasts. In fact, absolute majority, if not all of them, will say that firstly, they don't bother themselves with market forecasts, and market forecasts are used of time and money and energy. That's what they are all saying. And I am agreeing it not because I simply believe this sounds cool, but this is objective evidence. You don't need to forecast markets to make money in markets. You have to understand intrinsic market or strategy which you are working with and understand what you could expect of it. For instance, if you invest in ETFs, you are kind of positioning yourself that you are making sort of predictable returns. You are not shooting for the stars, but you are not risking all your capital to one trade either. So you will know that you will have rather boring but predictable returns, which is perfectly fine for most of the investors. There are others who want to find best stocks, and their 10,000 or 100,000 investment will yield in millions after 10 or 50 years, proverbial 10 baggers. And then there are people who are, for instance, making money on large trends. Those are CTAs, global macro traders, or trend followers. They don't forecast markets. If you look at trend following strategies, you will see that trend followers actually completely ignore both fundamental and technical analysis. All they know is that markets are moving between ranges and trends. In 80% times they are moving in certain ranges, and then they explode upwards or downwards and having huge trends. For now we are witnessing trends in AI stocks and in gold and silver, and other markets are, for instance, staying flat. But after a couple of years it will change, and there will be other markets which are making huge moves, and hottest markets of today will be flat. So if you are properly diversifying yourself, you don't care about that. That's why I'm always saying, if you understand the nature of specific markets and specific strategies, you will see that you have to spend absolute majority of time of balancing odds and balancing probabilities of what will happen with your trading approach or investing approach when something happens, and what are the possibilities of that thing that might happen, rather than forecasting of them. Because there might be 1% opportunity that there will be like market collapse, but maybe that 1% opportunity might make you 100 times your initial investment. This is, for instance, if you are buying out of money options. And maybe if you are really exposed to really high stock market prices, 20% stock market drop could wipe out your trading or investing capital. So that means you have to understand what will happen to you when this happens, rather than forecasting that markets simply go higher because you are afraid of market fall. So this is the way you have to approach the markets. Understand probabilities and invest in strategies when you are understanding these probabilities. But do not waste your time and do not waste your life to forecast markets. For God's sake, don't do it. And I really don't envy those people who are in position where they are dependent on market forecasts. For instance, someone has to budget next year's fiscal budget depending on currency rates or interest rates, because they have to issue government bonds, or other countries are dependent on specific commodities, for instance, dependent on oil prices. So first things first, if you are depending on that, change your position or change your strategy. You are doomed. That's not the place for you to be. For you, the place to be is position where you are not particularly concerned what will happen with markets to next 6 or 12 months. You are just making money out of probabilities. That's the best way for you how to trade or invest. And this is the way how you actually have to think if you are working with markets. Probabilities and maximizing the odds. And from other side, completely ignore market forecasts. Do not think whether you are right or wrong, but think what you would do when markets are either rising or falling in unexpected ways. This is the way you have to think, and you have to act towards financial markets.